Hello, thank you for having us again, or at least me again. At a time that yields are so good everywhere, everyone is looking for good assets. And I know that Canadian municipalities are highly sought after. Could you elaborate on some of the difference between US and Canadian municipals? And what are the differences, if any, when it comes to Canada and Canadian municipal issues that impact your credit? If you could start, Ed.
Okay, thanks. The major difference that I can see right off is that U.S. municipalities tend to issue tax-exempt debentures or bonds, whereas the Canadian municipalities are all more like, I'll say more like corporates, where they're fully taxable. They tend to be, the larger ones tend to be more like bullet bonds and so forth. And that has a difference, I think, in terms of even the markets. I think it's a retail market, I think more in the U.S., just because of the fact that they are tax exempt, whereas I think in Canada they're more sold institutionally and so forth to banks and so forth. In terms of the credit, I think there's a lot of differences in credit. I think it's a different, I should also mention though, most of the larger municipalities in Canada do have at least AA or AAA ratings. So I think the credit, why that credit is there's several reasons. I think one of them has to do with stability of our revenue sources. We don't do things like sales tax. That's not usually part of our revenue. We don't, the taxes, the property taxes that we do tend to be very stable. We don't have a fixed mill rate. We tend to have mill rates that get readjusted as the economy goes. So if you have a good year, a good economic year versus a poor economic year, you see that we're still bringing in the same amount of revenue. Other things that we have, I think that are notable, we don't have equivalent in Canada of Chapter 9, which I think is that municipalities in Canada do not go bankrupt or cannot go bankrupt. We also have a very strong regulatory regime in Canada, mostly done through the provinces, that does limit what we can or cannot do, and it provides a lot of investor safeguards.
Would you like to weigh in, Peter?
Sure. I think Ed went through many of the differences. The one thing I'd say is that we have a much smaller market, municipal bond market in Canada in terms of the amount outstanding, and that's because we issue really general obligation bonds, as Ed mentioned. You can borrow, local governments, regions, hospitals issue a lot of revenue bonds in the States, and it's a huge market. It's a $4 trillion market versus roughly a $50 billion market in Canada. And then the other thing I'll say is there's three different ways municipalities access the markets in Canada. Through a pool, like through Municipal Finance Authority in British Columbia, where they're borrowing through an infrastructure bank directly, so the way that, say, Region of York or TransLink or City of Toronto would issue directly to the market, or in some cases the province. So for example, in New Brunswick or Nova Scotia, the province issues, and then they lend to the local government. So there's three main ways that they access the markets.
And, talking about transit, like Canada's largest cities have been focused on building, expanding, or at least operating like large transit systems. Why is this important, and what have you done, and what are your plans regarding transit? Like, has COVID and the current economical environment impacted any of it?
Yeah, definitely in the Metro Vancouver area, transit is very important. We don't have a huge road network. We have the ocean to the west, mountains to the north, the border, U.S. border to the south. So it's extremely important for our economy, for goods movement, and just, moving people around. So during COVID, like every other transit agency in the world, we really suffered from ridership. We're very pleased how it's bounced back, and really we're about 85–90% of pre-COVID levels. We consider it kind of our new normal. So with organizations not going back to work 5 days a week, it really has impacted the travel patterns of our customers. We don't have the high peak times that we used to, and we have increases in the off-peak and weekend travel as well. In some of our regions, we're well over, we're like 120, 125% above pre-COVID levels. So we're really starting to see the crowding again, like we were before COVID. As far as projects, we're expanding right now. We're expanding our SkyTrain line into Vancouver, further into Vancouver. We're expanding it from Surrey to Langley, which is 2 municipalities. So it's going to go further out into the valley. So those are underway right now. They started, a number of years ago. The province is actually delivering the SkyTrain lines, and then we will operate it, and we have integration plans and whatnot. But there's a lot of upgrades, ordering new SkyTrain cars, upgrading the power system, building new operations and maintenance center. So lots of stuff on the go. But that's not enough. We have to look at the next phase. We work really closely with our 21 mayors of the municipalities with which we serve, and they've actually approved what we call Access for Everyone plan, which will be the next phase of our projects and our expansion. Funding is an issue still. We do have a large funding gap because of the inflation that we've experienced over the last few years, as well, mainly labor as well. So what we've done to kind of fight that is we've looked at our capital program, we've decreased some of the capital projects without, or delayed them, I should say, without sacrificing safety or reliability. So we've kind of reset that a bit, but we are working with our mayors and the provincial government to find another funding source for us. And it's really important for us to be shovel ready when the funding does come from our senior governments. Like the federal government has a permanent transit fund that is supposed to take place in 2026. We're working with them to try and negotiate it early, but we will be ready when that funding comes for the future expansion. Thank you.
And are you seeing similar trends in York, with
Oh, yeah.
rising costs? And
Yeah. Well, I think in terms of there, let me just talk about what we do. I mean, our municipalities is responsible for both conventional and rapid transit. So, and I think as Christine's talked about, it's really important to build this transit in order to kind of get people around and, to help relieve congestion and so forth. So it has been a big focus over the last number of years. We have, since COVID has come back, I think, or since COVID, we've seen a lot of our transit ridership come back on there. I think we were at one point, I think we were about 50% of the ridership. I think this year we're going to be probably 90% back to ridership levels. Hopefully next year we'll be at pre-pandemic levels. In terms of what our plans are, I think that was one of the questions. We are very much into the BRT projects, bus rapid transit projects. I think we're still looking for that senior government funding. These are very expensive programs. I think this is about a $1.8 billion project over 10 years. And we're also very much involved in extensions of subways from the City of Toronto. And this one has been funded. It's just a case of, it's being built through Metrolinx. And that's a $5.6 billion plus, who knows by the time it's finished. We're contributing over $1 billion towards that. Okay.
Thank you. Housing has been one of the biggest issues. You could see, we discussed that in previous panels. Who needs to take the lead in solving this problem, and how does the local government fit into that puzzle? If you'd like to start, Peter.
Sure. Housing is absolutely a big issue, and I know it's been talked about a lot. In particular in Canada, we, I think, have the highest housing prices in the world now relative to our incomes. It's a shared responsibility. So I think really it requires a lot of collaboration and cooperation between different levels of governments. Just to give some context, the federal government sets overall policy for housing for the nation, provides funding for housing, social housing, and other low-income housing, and of course owns CMHC, who you've heard from today at this conference, who is the National Housing Agency, that, whose mandate is to really ensure that everyone has a safe and affordable house throughout the country. Then the province implements those policies, but also creates its own initiatives and policies, and does provide funding as well. And of course, local governments have a very big role to play in planning and zoning regulation. So it requires a lot of cooperation between all these areas of government. It's become a very big political imperative. So politicians at all levels of our government understand how important this is. In BC in particular, maybe I'll just talk about, BC, as Christine just mentioned, is nestled between mountains and the ocean. There is not a lot of land in Canada, in BC in particular, where you can build new housing. So people tend to think Canada's this vast country, so why is housing a problem? The reality is most Canadians live within 100 miles, obviously, of the US. So in BC, there's been for years a big focus. So BC's the fastest growing province in terms of population. I think we're roughly 5.5 million. And just last year, we received 150,000 new immigrants into the province. So it's an acute problem there. There's been many plans. There have been all sorts of initiatives like empty home taxes and other initiatives. Most recently, some of the most interesting I'll just mention are density policies, zoning. So this is a big one. It was done in New Zealand and some other countries a few years ago, where the province has announced that if you have a single-family home, you will automatically be allowed to build 4 to 6 units on that single-family lot. Regulations are coming out around that. So this does pose an issue for local governments because we have to develop the services and the infrastructure to deal with those increased housing units. So it's going to require a lot of cooperation, and absolutely everybody is taking the lead. But it's a complicated file, and it will take, Canada. The crux of this problem came in the 70s and 80s. Canada used to spend a lot of money on social and other forms of housing. They've pulled away and pushed it to the private sector, not for profit. Really hasn't worked. So it'll take probably a decade to fix this problem.
Just a decade. That's optimistic.
Just a decade.
What about you, Ed?
I mean, this is a national problem. I know in Ontario, our provincial government recently announced their targets to build 1.5 million homes over the next 10 years, and they've actually engaged the local municipalities with that by assigning some of them targets. I know York Region, I think, has 150,000 over the next 10 years. I do think that, I don't want to say that, hey, it's just a problem for municipalities. This is a very complex problem. It's not just housing that we need. I think it's affordable housing. That's one of the big issues. I know our council has been very, very strong on the fact that they have an affordable housing crisis. So we don't need the $1 million homes. We need homes that people can, new immigrants in particular, can afford. And that's who are driving a lot of these requirements for homes. It's the new immigrants that come to the country that don't necessarily have those financial means to do it. I also think it's also a complex problem too, because it's not just that municipalities need to wave a wand and change the zoning and so forth. It's providing all the infrastructure that's required, the sewers and so forth, water, sewers, transportation, and this is a multi-billion-dollar cost for us, and it takes time. So again, just to kind of reiterate there, it's not just a simple solution; it's a complex solution, and I think, as Peter says, it takes everybody to maybe solve that.
Yes, for sure.
And part of it's going to be, I think we need more financial resources into it.
And I think it's a bit even more complicated than what you mentioned, because of course it's difficult for immigrants, but with a house going for north of $1 million in the region of Toronto, I think like even people born and raised there are having issues buying house now.
I have 2 children who are sort of in their 20s, and they're all talk about wanting to buy a house, and I think at this point it seems like it's beyond their reach.
Yeah, and would you like to add anything?
Yeah, TransLink's very involved, not in the housing necessarily, but we're a very important part. High density around our transit hubs is very important. The province of BC is introducing legislation around increasing the density and the housing, and where we fit in is working with the province and helping define what that transit hub looks like how far out does it go. We want to make sure that people can walk or cycle to the transit hubs. So we're very involved in those discussions. We also have a real estate development venture that we're involved in for the properties that we own around our transit hubs to develop housing as well. And so, that's kind of our connection. We see, and the province and the municipalities with which we serve see a very, very big connection in where those developments are going to be developed. And it needs to be focused around our transit hubs.
Thank you. Just going back to what I was talking at the beginning in this flight to quality, are you seeing a broader range of investors approaching you, interested in investing? Is that something that you noticed changing with yields so high elsewhere?
Yeah, certainly as we embarked in our green bonds, we saw definitely an increase in the number of investors, which is very important to us to increase the investor base that we have. When we issue bonds, the more investors you have, I think the more successful that will be, obviously. And I think it really boded well with, when COVID hit. We do have I believe it's a very good investor program where we like to meet with our investors whenever they want, explain what's happening in transit, what's happening in TransLink, how are we recovering from COVID, so that when we do go to the market, they know they don't have to ask the question again. They're up to date on what we're doing. So I think it really boded well when the market is so volatile that those questions are already answered.
Yeah, let me just sort of say, I think municipalities have not been very good at marketing themselves in the past. And I think when I first started to doing some IR, I think it was about 15 years ago, I think we had about 6 buyers of our bonds. I mean, we didn't issue as much as we do now, but we started doing this, doing IR and getting out, explaining the credit. And I think it's a very strong credit to start off. We are, as I said, that we're very highly rated. People just didn't understand us, didn't know who we were. We've now, having gone through this over a number of years, we typically have, we just did a debenture deal last week, and I think we had like 23, 24 buyers for $150 million. I think overall we've seen, and it depends upon the term, it depends upon, mainly the terms, types of projects and so forth we do. But we do get a number of, we probably have up to 60 or 70 regular buyers of ours. So yeah, I think we've seen that over the years. We are not green bond issuers at this point. That's something that we hope to be doing as we get into some of these other projects. I think our program isn't big enough to support doing a green bond and doing conventional bonds. So, we are looking forward to continuing to meet with people and explain the credit.
And are you getting pressure from investors to do more green bonds, or is that something?
Well, we haven't done labeled green bonds yet. But anybody who's heard me speak, I always say municipalities aren't exactly smokestack industries. I think by and large, they are leaders in what we traditionally call green projects. We do water, wastewater, transit. Those are typically labeled under green. And in terms of the social or social type bonds, what do we do with long-term care facilities? We have all sorts of things that we do that would qualify if we kind of broke them out and do that. And one thing that we're doing now in terms of our programs is actually listing those projects so people can see what we're actually financing, so they can make their own decisions on that. But like I said, it's more in terms of an issuer. I think people maybe should be thinking of us as a ESG type issuer, not necessarily that particular bond is an ESG bond.
That makes sense.
So if I can just add on investor development, MFA is a little bit unique. So we are the largest municipal issuer in Canada, together with City of Toronto, Montreal, then of course York and TransLink are important issuers as well. We've been pushing quite hard on, obviously we're all Canadian dollar issuers, so it's important to understand that. But what we have seen over the last decade is more and more Canadian dollar portfolios around the world. So both in the US, state funds and other asset managers have been investing in Canadian dollars, and central banks in particular have been increasing their Canadian dollar holdings. So MFA, we're a little bit unique in that we're a level 1, 0% risk-weighted asset as an infrastructure bank. So it has allowed us to deepen those particular type of buyers, central banks and official institutions. Also, our deal sizes, we try to keep them quite large, and that's helped with our investor development. So we've seen quite an increase over the last 5 years in international. We sell 20% or so of our new issues internationally. And with respect to green bonds or ESG generally, we're also very focused on ESG. I would echo, I mean, obviously TransLink does issue green bonds because it's perfect for their business line. It fits perfectly with transit. In the case of MFA, we do focus on ESG and really the risks that it represents to our lending, and that's really our top focus. We have the same view that Ed has, that really we view all municipal issuance to be either social or green. So we do have a framework that we've set up, a sustainability bond framework, but we're not focused. We don't think people should be focused on the label. We think they should be focused on the issuer themselves. And I think with standardization happening in the ESG world, I see that happening with investors. They're making their own determination now of the issuer and the risks that climate represents to that issuer, and are they managing those risks well? And I believe that's sort of the next wave of social finance, will be a focus on the issuer and how they're incorporating ESG into their credit.
As you get increasing, exposure from investors outside of Canada, are they asking for different things than Canadians are, or are the requests very similar?
So in terms of buyers of social finance, so it varies across. In Europe, they're quite more advanced compared to North America. So they do have specific requests. Some buyers in North America and in Europe do require labeling at this point because they haven't yet set up their investment teams to have the ability to analyze themselves. So there's value to labeling from that perspective, but it's a very small percentage. The thing that they have asked for, and which we've been doing for over 3 years now, is we tell them exactly where all our dollars go. So this associating our borrowing with the exact projects that we are investing in. So some are asking for that. But I think the next step is they really want to get a feel for how ESG-related risks are being managed, and particularly at MFA, because we're viewed as a bank or financial institution, as opposed to, say, a pure municipality or government. They really are interested in figuring out how are we doing our own credit analysis for our own loans and for our own investments, and how do risks impact local governments in BC.
Actually,
Ed, would you like to jump in? And then
just quickly, I should have mentioned in terms of the region that even though we're not issuing ESG bonds, label bonds now, we are developing a framework so that we will probably in the future, when we get involved in some of these large, particularly transit and water projects and so forth, where it will be the right time, we will have that ability to do it. But we are developing a framework now. And again, as Peter mentioned, we do end up marketing probably up to 20%. I think it's, it varies depending upon issue. We do market those in Canadian dollars into the US and sometimes into Europe.
Yeah, we're probably out of time, but I just wanted to mention, I agree with Peter in that investors, yes, they look at our green bond projects, what are they borrowing for, but they also evaluate us as an organization, and I've gotten that information as we meet with our investors regularly. They're looking at us as an organization. What are we like? What are we doing? Are we socially responsible? So yes, they want the green projects, but they also want to make sure that we're a good organization.
that makes sense. So thank you for sharing your views, and thank you for listening.
Thank you.